Yeah. So let's go back to what was the deal? You said you were just finishing a closing. You sold a property that you just bought, or sold a property you've owned for a while?
Well, actually, I've owned it for probably 15 years.
15 years.
It was on the market for rent, and I had these people call and wanted to see it, and I showed them the house, and they liked it, and they said, "Is there any possibility of buying on a contract?" And I said, "Yes." So we went back to the office and sat down and went through some numbers, and I found out that they had $25,000 as a down payment.
Nice.
It's a $120,000 house.
Okay, so let's go through that. They had 20,000.
25,000 down on a 120 purchase price.
So 25,000 divided by 120. So they had 21% down payment. That's awesome. So that gives them a $100,000 note. So I'm going to put it in there. Okay, $95,000 note, and you did 7% interest.
7%.
And amortized.
25 years.
5 times 12 is the total number of payments that goes in over here. And no balloon?
A 5-year balloon.
There is a 5-year balloon. So what's the... Well, let's see. I'm going to put 0 in there now. So their monthly payment is $671.44. And... principal and interest. So at the end of 5 years, we're going to look at what the balance on the note's going to be. $86,604. Okay, $86,604. And that's the note. You got 25,000. Did you own it free and clear?
No, I do have an underlying first. I got an underlying first mortgage on that.
Okay, awesome. And okay, so and how much monthly is it?
Is my payment? I don't really know. I haven't even looked at that lately, but it's something a lot less than that.
So it's less than 671, plus you don't have taxes and insurance and maintenance anymore.
Exactly, which really increases my returns. And also, I'll just throw a note in there that I am collecting an extra $198 a month on top of that $671.44 for tax.
Oh, so you're impounding.
I am pounding. I don't want to send them the bill because they may not have it when the bill comes due.
Well, that's awesome then. So have you calculated what your return, your ROI on this deal has been?
I haven't even had time to do that. I just got back from closing before you called me.
Well, anyway, the point is you did really well instead of if you would have rented the property, what would you have rented it for?
That property rented for $1,050 per month.
So it would have rented for $1,050, and then taxes and insurance over a month. What would they have been?
Was $198 a month.
Oh, duh! You just told me that. Yeah. So you'd be getting $852, but you've got maintenance to take care of.
I got maintenance, insurance, and an underlying mortgage. So, even let's say I had a $200 a month positive cash flow, my cash flow will actually increase because, as you mentioned, not having the expenses and taxes, insurance, and maintenance anymore.
Yeah, exactly. I mean, it's kind of like you're. Yeah, go ahead.
And I'm getting 7% on my equity, which I can't get anywhere else on the planet.
Right.
So all in all, it's not a bad little cash flow machine when you do these.
No, and plus, I don't think it hurt your feelings to get 25,000 in your pocket either, right?
That didn't bother me at all.
Yeah.
Not at all.
Okay.
I have to buy you some roses and send them on out to you.
You. All right. Well, hey, that's a lot of great info. Really fun once again, and look forward to having you down here in October, and we can do this class together. So, you have a great week. You have a great weekend, Randy.
All right.
All righty. Bye bye.